Hi, in this short video I'm going to share with you how to buy buy-to-let property in the UK in 2021. Hi, my name is Mark Lloyd. I'm one of the co-founders of Property Master Academy. We guide you to safely and successfully invest in property. Now, if you're just starting out in property, the first thing you want to consider is how you're going to structure your business, because the older ways of operating a property portfolio are no longer profitable. In other words, buying in your own name is not necessarily the right thing to do. It might have worked 5-10 years ago, but it doesn't work now if you want to build a large portfolio. So if you're starting out, firstly, check with your accountant, discuss what your goals are. But if you're looking to build a large portfolio, the chances are you're going to want to invest via a limited company or an LLP, a limited liability partnership. But your accountant can advise you on that. If you're only looking to build a small portfolio and you're a basic rate taxpayer, and the income from the portfolio will not exceed that basic rate limit, then it may still be advantageous for you to buy in your own name. But as I said, check that out with a property accountant to make sure you understand what the options are. One of the main benefits of investing via a limited company is you get the tax advantages of doing so. So it's a lower tax rate initially, but also you can offset the mortgage interest relief regardless of whatever your tax rate is. Whereas you can't do that if you're investing as an individual above the basic rate level. If you're an overseas investor looking to invest in the UK, then really your best option is going to be a limited company and opening a bank account here. Now, getting mortgages for you as an overseas investor is not straightforward. It's essential you speak to someone that understands your market, and there are specialist brokers in the UK that can actually help you. Whilst there are some additional responsibilities with setting up a limited company in the UK, it is by far, in my opinion, the best method to do so. But also, if you're looking to set out to create a business and the objective of that business is clearly to make a profit, then in my opinion, a limited company is by far the best route to use. So now you've decided as to which structure you're going to use, the next thing to do is to start looking for properties. And there are a number of different portals within the UK property market where you can search and find suitable properties. Biggest ones of those are Rightmove, Zoopla and On the Market. But that's just three. There's also finding properties off market as well. That's something you can learn over a period of time. Would suggest you need the guidance of someone experienced in that to help you. Of course, buying these properties is just one part of the equation. The next bit is really running the numbers to see if it's a viable investment to make. Now, there are a number of different percentages you can look at, from yield, return on investment, return on capital. They're all different things. But what's important is what you want. Now, regardless of what you may see advertised, the important percentage, in my opinion, is the return on capital. In other words, the amount of money you're putting into a property and is going to be left in there versus the net rental received. For me, that's the most important equation, particularly if you're looking to borrow against the property, so mortgage the property. And in the UK, if you're a UK resident, you can generally borrow up to 75% of the value of that property, or the purchase price, whichever is the lower. Now, even though you will have worked out your return on capital, it will then come down to the net cash flow figure. You may have a figure in mind. So I tend to work on a straightforward buy-to-let, something like £300 to £500 net cash flow per month. Now, I tie that in with my return on capital figures and make sure the two come somewhere close to each other. If they do, then that looks like a viable investment for me. When you're looking for properties, ideally you want to be looking for something where you can add value. Now, what I mean by that is a property that perhaps needs a new kitchen, new bathroom, maybe new windows, decoration, those kind of things. Because by adding some value, spending some money on those items will increase the value of the property. So what we call forced appreciation. So typically, for every £2 you spend, you want to be creating another £1 in value. So now that you've added value, you've carried out the refurbishment, you've forced some appreciation on that property, you can now look to potentially refinance. Now, as I said earlier, that means waiting usually 6 months before you can do so. But on refinance, you can potentially pull out some of your initial capital and possibly some of the refurbishment money too. So let's look at a basic example. Let's assume we purchase a property for £100,000. That means your initial capital input will be £25,000 plus costs. Now we're going to add some value to the property, and that's going to cost us, let's say, £30,000. So your capital input at this stage is £55,000. Now, bearing in mind what I said earlier also, that when you're adding value to the property, you look to add an extra pound on top of every £2 that you're spending. So based on the £30,000 refurbishment cost, that means we're looking to create value up to £45,000. So we now have a property worth, hopefully, £145,000 or maybe more. So we can look to refinance at that new value. Now, bearing in mind we could borrow 75% of that value, that means we can extract our initial deposit and a little bit more. When you're starting out in property investing and getting mortgages, initially the lenders will look really closely at your personal income because you now have no other property investments at that stage. But as you start to grow and get to 4 and above, you're then considered to be a professional landlord, and the lenders will look at you in a different light. Well, I hope you've enjoyed listening to this video. If you have, please hit the subscribe button below so you get notified of other videos as they arise, and also the notification bell. And please also watch the other videos that are popping up on your screen now. They're for your benefit and will help you with your property investing. See you on the next video.